Okay, I know it has been a few weeks, but I got a little bit busy with some stuff. Anyway, I am back and I created a new website. It's called Net Worth Well, this kind of working title, so don't hate too much. If you do have any good ideas, I am open to them. Go ahead and post them below in the comments. But anyway, there's it's a pretty basic website. I have this kind of research section here in personal finance just for a couple of the things I recommend, and then kind of my investing philosophy and my thoughts behind everything that I'm doing. So, kind of from a high level, you guys know why I do what I do, and then this is kind of the bulk of the website. I do have quite a bit of information here on trading options and why I'm into it, the benefits, the drawbacks, that sort of thing. So, I do think this is a pretty good source of information, and it's all in one spot. And then I have a couple books and stuff. And then, as you guys know, I have my portfolio tracker here that you can open anytime. You guys have seen my videos before, you know I always reference to that. So there is that page, and then just a little bit about the website and why I made it. Anyway, okay, so you can expect regular blog content on here. I got 5 up right now, and I want to talk about the first one that I wrote, and it is how to beat the market using covered calls. And essentially, the entire strategy, the efficient market hypothesis, we kind of talked about that a little bit in here. But anyway, you can't beat the market. Nobody can beat the market consistently over time. Everybody knows that. It's kind of a foregone conclusion. That is a lot of what drives my entire investing philosophy and the ideas behind my trades and stuff like that. So I do own index funds pretty heavily. You can see VT right there. It takes up about 20% of my portfolio. So basically, if you read a book like A Random Walk Down Wall Street, that's one I love and highly recommend. If you read that book, it basically comes to the conclusion that instead of trying to beat the market, you should just passively buy index funds and average the market returns, and that is as good as you will do. And I agree with that for the most part, but I think you can beat the market by selling covered calls. So you own the market, and then you sell covered calls regularly on that. And I know what you're thinking, and I kind of talk about that. Like I said, you can get more into the details of it all in this article here. But the big drawback to selling covered calls is that it limits your upside potential, right? So if you sell a strike price of $100 and the index goes to $110, you basically missed out on that $10 of price appreciation. And this is true if you don't ever manage your trade. I am a huge fan of rolling covered calls, and I have never had my shares called away from me because I always roll my covered calls. So I have another article on that here on the website. So if you want to look at how to do that, most of these articles are pretty short and straightforward. I get right to the point. So my conclusion is if you own the market and sell a covered call on it every few weeks, collect the premium, and then make sure you never get the shares called away, basically by rolling your covered calls. If they are at risk of being exercised, then you can beat the market. So that is the essential idea behind the whole thing, and we can look at it a little bit closer. So if you were to use SPY for the market, obviously you can see some big returns over time. So generally, the market is in an uptrend, so you want to be selling slightly out of the money calls, and preferably every week or 2 weeks, basically any more frequently than once a month to get the most premium collected. I go over that in this article and a couple of the other articles, so I highly recommend checking out the site. I just kind of want to lay the overview for it in this video and kind of get your interest piqued into what I'm saying. But so say you own the S&P, SPY, you own 100 shares, so you got about $42,000. And this is a big drawback for the strategy, obviously, is there's going to be quite a big capital outlay for doing it. I mean, I'm talking about owning $42,000 of the S&P 500. So that is no small feat in and of itself. But if you can and do, we'll say we'll go a week out. So I would say, just sell the 426 call. I kind of look at these with the deltas around 0.25, which generally speaking is around this 80% profit mark on Robinhood. Anyway, okay, whatever. I won't make any comments about Robinhood, but I do use them a bit still. And the UI is super simple, so I really like explaining videos using Robinhood. Anyway, so by owning SPY, you're going to get the average market return. That's just the way it works by owning the market. And then by selling this or a similar one, by selling covered calls slightly out of the money, if the market is flat or it goes down, you're going to be $80 better off. And if the market, even if the market rises slightly, you're going to be $80 better off. It stays below the strike price. Say SPY goes up to about 430, and you need to roll this call. You simply buy it back. You'll be buying it back at a loss, but you'll simply just be selling a higher strike price at a later date, and basically trying to cover the debit difference that you just bought this one back for. So say you have to buy this one back for $1.20 per share or whatever it is, you'll be trying to collect at least $1.20 by selling a further dated call. So anyway, $1.20, you can sell it slightly further out of the money, and then the extra time premium baked into the longer expiration dated calls will make up the difference. Okay, so that is how to roll it. So then at that point, you're not losing money if SPY does blow right past your strike price. You'll just sell a higher call for a later date, and eventually, if you keep doing that, one of them will expire worthless, and you'll come out ahead in that scenario as well. So that is the entire crux of the video. If you guys have any questions, let me know down in the comments below. If you want to see me explain anything in particular, same thing, let me know down in the comments. If you have any ideas or recommendations for my site, same thing, post them below, and I will try to make those changes for you guys. So thanks for watching, and I'll catch you guys in the next one.